Here's the opening line from a new Wall Street Journal op-ed. Federal Reserve Chairman Jerome Powell must be kicking himself for not cutting the Fed fund rates at last week's Federal Open Market Committee meeting. Former Council of Economic Advisors Chair Jason Furman wrote that, and he joins us now to explain. I wonder, Jason, whether we need to just rethink everything we've thought about the soft landing and everything else that we're assuming, is going to play out the way we want it. Is there some question in your mind whether it's clear sailing here?
Look, all of this data is incremental. The economy never tells us the new direction it's heading in super clear language with one release. It's all about balance of risks. And yes, the balance of risks have shifted. In my mind, there's a greater risk of recession than there is of elevated inflation at this point.
And being someone who's been around for quite a while, you're not, obviously, some of us have been around even longer, quite a bit longer. But when we're all expecting a recession, we never get one. And we were 2 years ago. Remember that? Third quarter, fourth quarter, first quarter, I don't know, maybe not 2023, early 2020. I mean, everybody. Now it's nobody's saying that. It's like we've dodged it. It's not going to happen. Does that make you uncomfortable?
Oh, look, I think the odds are we're not going to have a recession. I don't think there's some great reason to believe we're going into a recession. It's just that inflation is about half a point above where it should be. The unemployment rate is rising. I think inflation's going to head probably back down, certainly if the unemployment rate stays there. And so the Fed can focus more on that other risk. And by the way, even if the Fed starts cutting rates in September, or when they start cutting rates in September, we're still going to have a somewhat contractionary stance for monetary policy. So this is not, we're headed into recession, cut the rate to zero, panic with the 75 basis points emergency cut one of your guests talked about 2 days ago.
Right.
This is just a recalibration.
It's still kind of weird that we were at 5 or 6 cuts, the market believed, that we went all the way down to 1, maybe 2 cuts. And now some people are all the way back to 5 or 6. That's how quickly things can change. And it's really not that many data points which caused a big revisiting of our expectations. You said you're not expecting a recession. And no one ever knows 100%, but they go 20%, 30%, 40%. Did you ratchet it up in your mind at all, the possibility?
Yeah, when I saw that unemployment print, what's called the SOM rule now is originally Goldman Sachs. I was looking at that back in 2007, and it was making me really nervous about us tipping into recession. You can explain it away now with the immigration surge, with we're not seeing a big increase in firings and the like. But still, I'm a bit nervous. So give me a 1-year horizon. Yeah, about 20, 25%, which is higher than the normal 15% if you don't know anything.